This is gonna sound stupidly simple, but this one trading concept made me over $1 million trading the CFD and futures markets. It's not a strategy, it's not an indicator, it's not a secret setup. It's not a golden nugget. A concept so boring that most traders ignore it. And that's exactly why they stay broke and unprofitable. In this video, I'll show you what that concept is, how I use it every single day, trading the markets, and why it changed everything once I finally took it seriously. But before we go into that, just wanted to let you guys know that I have created a free training video for everyone to watch. You can watch it by clicking the first link in the description box, no strings attached. The training will help you understand exactly what you need to do in order to become a profitable trader. Now let's go over on the charts and I'll show you guys this simple, stupid concept that you can start applying now. Alright guys, so we're now on the charts and what I'm about to show you has literally changed my life. It's a very simple concept that me and my students have been using for the past few years very successfully, and we managed to make a lot of money. So the concept that I'm about to show you is called the flip zone. Now I have mentioned this concept multiple times and I also included it in the free training video. However, just wanted to make a separate video to go over how important this concept is and how it can literally help you get the best entries. So this works on CFD, this works on crypto, this works on futures. It doesn't matter. The concept works on every market that there is. I've successfully used it to trade Euro USD, GBP USD, gold. I've successfully used it to trade NQ and ES as well. And lately I've been using it a lot on NQ and managed to find some very good trades. As you guys can see, this is a trade that I've taken on Friday using that concept, and another trade right here, go on the 5 minute, that I've taken on Thursday for a 1 to 2 risk reward. There's a bunch of opportunities like this, but first, let me just explain it. So every time you have a break of structure to the upside, obviously you create a break of structure, you create a new high and a new low in the market. Now, most people wait for price to retrace all the way down here in order to look for a continuation, or they mark like 2 or 3 fair value gaps, another order block, and then just take trades at every single point of interest, trying to catch the move up. But the easiest way to find the continuation, especially when momentum is really going in one direction, price doesn't always retrace all the way to that area, that order block that created the impulse move. What you usually see is after a big impulse, price is ranging down, creating something like this, and then you get the break. After you get the break of structure, what you have to do, right? You basically have two zones. You have the extreme zone and you have the flip zone. I'm not going to talk about the extreme zone in this video. I'm just going to focus on the flip zone. What is the flip zone? The flip zone is the last area before the break of structure. So before price created this impulse move to the upside that created the break of structure, we need to find and identify the flip zone, the last area from where price took off. Now, that last area can be three things that I've noticed, right? And that work very good. The flip zone can have either an order block, right, which is in this case, because we're looking at a bullish example, we're going to have a bearish candle just before the move up. We can have a fair value gap, a small imbalance, but this doesn't really work the best. Or we can have 2 weeks. Why 2 weeks? Well, obviously if we're trading the 5 minute, 15 minute time frame, that means we're going to get an order block on the 1 minute time frame. So it looks like this with 2 weeks, right? These 2 weeks, which on the lower time frame may look like an order block. So you may have a bullish candle, then a small bearish candle before the next candle to the upside. And usually that is, if that makes sense, those 2 weeks are a smaller candle on the lower time frames. Now, these are the three things that I've noticed work the best at the flip zone. Now, how do I exactly identify that? As I said, it's the last one, the last little bit of price action like this before the big move up. So basically after the break of structure, we're looking before in this area. Now there is a situation where we just have a small range, so we'll just call that 4 types of flip zones. Like you get a small range, so let's say it's something like this, and then price ranges before it breaks higher, you just mark that range, and that is your flip zone. And the best way to trade that flip zone is simply to wait. So let's say this is my flip zone, is to wait for price to return there and give you either depending on what time frame you're trading on, a 1 minute or 5 minute bullish confirmation. That's what I have been using, especially on NQ. Just that little confirmation, 1 minute. I watch for the 1 minute close if price is moving extremely fast, if there's a lot of volatility in the markets, and the 5 minute candle, if price is not that aggressive, you know, it moves slower, so I can wait for the 5 minute to close. And then what I do, so let's say we have a small bullish candle closing right here on the 1 minute. I simply enter on the retest of the next candle, put my stops below that area, and then aim for a 1-to-1 or a 1-to-2 at the most recent high. And that is the one single concept that I've been using. To be honest, completely honest, I think my last 20 or 30 trades were strictly taken based on this flip zone. And this is exactly the trade that I took on, where was it? I don't have it marked. The trade that I took and I showcased in the last breakdown on Euro USD. It was exactly this one. Now I know the stop loss was a bit big, which caused me to miss my TP2 by exactly 2 points, 2 pips. The reason I had such a bigger stop loss was because CPI was coming in. But normally stop loss would have had to be in around here. So let's say 10 pips on Euro USD. And that's exactly the flip zone that I've been talking about, right? And look how price respected it. Why? Because look at that, 50 minute coming down, small range, impulse to the upside, breaking structure. I got my order block right here, the last candle, right? If I go down on the 5 minute, that's why I marked this one, this entire area, and just watched it. And you can see price came there, gave me a 5 minute bullish confirmation, waited for the retest, and I entered there. So what I'm teaching you guys, I'm practicing every single day in the live markets. So now let's take a look on those examples on NQ. So let's start with a trade on Thursday. What do we have? Well, obviously 50 minute was moving quite bullish before New York open, and then we had this impulse move right here. So when this happens, what people usually do is they mark the entire area as a fair value gap and watch for an entry there. But if we go down on the 5 minute time frame and watch for that flip zone, right? Flip zone right here. Why? Because price pushed impulse. In this case, you can see the flip zone is marked after the recent break of structure. But if we go down on the 1 minute time frame, we can see that another break of structure happened. We had the impulse move, small range down, and another break of structure. So for me, that is my flip zone. We can take this candle as well, so we can mark the entire area, but because price was moving so fast, again, I like to mark bigger area. And let's see what happens. Price comes slowly, I mean not really slowly, very aggressive down. We can see it taps the area. It has a 1 minute bullish close, but I didn't really like it, so I waited a little bit more. Then the next 1 minute candle came more aggressive. I had a bullish 1 minute close, and on the next 1 minute candle I executed the trade, covering the lows for 50 points, aiming for a 1-to-2, and you can see price went into profit, retested a little bit, gave more confirmation. And by the way, this was the 5 minute confirmation, I guess, because you had the 5 minute bullish close, but look how far away that moved, and you gotta wait for price to retrace to get the entry, and then you're gonna have a bigger stop loss, so it's not really worth it. So in these cases, I'd rather trade the 1 minute time frame. And then obviously I execute the trade right there, went into profit, retested again, and then this was an impulse move that I've taken to secure another win. Now let's take a look on yesterday's trade on Friday, because the same exact thing happened. We can see price is moving up, right, very aggressively. We gotta wait for a pullback. 5 minutes is breaking structure below, and at this point we got a liquidation of the low, right, with this candle, 5 minute bullish close. And here we can see we break structure because price was coming down. I wait for price to realign bullish. It realigns here with a break of structure, so then I mark my flip zone. Look at those 2 wicks, that's almost perfect. That's what I like to see. And on the 1 minute time frame, we can see that looks like a small candle, but on the 5 minutes, it's those 2 wicks that I've been talking about. As an extra bonus for you guys, you can also add the fib from the low towards the high to correctly identify your flip zone. If the flip zone is situated between 0.62 and 0.786 area, that is a correct flip zone, and price will most likely react. In this case, because price was already moving past a big impulse move, I waited for 5 minutes to close bullish from the area, entered on the next 5 minute candle as it was coming down, retesting, stop loss below the lows, and we can see price went towards the highs for a successful 1-to-2 point 34 risk reward. You can find a bunch of examples like this, especially when you got volatility. Let me go on the 15-minute time frame and try to find another example for you guys where we have that switch of structure and then price is quickly retesting the flip zone. Alright, I have another example here on NQ which actually happened on Tuesday this week, so we have the same exact thing. Price is moving down, it ranges a little bit, then it breaks structure to the upside, so now we can mark our flip zone. We can start looking down, or we can use the flip tool from the low of the move towards the high. And then I'm looking for, right, my flip zone between 0.62 and 0.786. What do I have in this case? Well, I have these two small wicks, but it's a little bit small for my liking, so I could extend it into the fair value gap as well, and it just covers the entire 0.7 to 0.786 area, which is pretty nice. And as you can see, you wait for price to retest, give you a 5-minute confirmation. We got this 5-minute candle closing like this. Enter on the next 5-minute candle retesting, put your stop loss. Again, as you saw on all my entries, you never just cover to the point. You add a few more points. Usually I round them up, so if this is like 30 points, I'm just gonna do 35, give it a little bit extra room in case price wants to tap the extreme right here before moving up, which in this case is exactly what it did. Or obviously you could just re-enter. If you want to go very aggressive, you have high risk rewards, you go like this, right? Your target is a 1 to 4 at the highs, you get stopped out, you get another 5-minute bullish close respecting the same area, you wait for the next 5 minutes to retrace, you enter something around here, again you cover the lows and you make your loss back. For me, I prefer a higher win rate, opposed to a higher risk reward. So I will always enter safer and just try to aim for a 1 to 2. And you can see how price went into a little bit of drawdown, then start to move up into profits. This is another very textbook A+ setup on NQ that happened with that flip zone. So again, just to recap, what you need to do to find the trade checklist is wait for a break of structure. Any time frame, this works on any time frame. I like to look at 15-minute to 5-minute. Then you can use the fib to spot the retracement area right here, and then you identify the flip zone, which can be again wicks, order block, fair value gap, or range. And then wait for 1 minute, 5-minute candle to close in your trading direction. Execute with stop loss below the low plus a few points to be safe, and then aim for the highs or whatever RR you trade, right? In my case, I try to aim for a 1 to 2. That's usually at the high, but sometimes when you get a better entry at the highs, you get like a 1 to 3, 1 to 4, and then I will extend my risk reward. This is exactly what has made me millions of dollars trading in the past 7-8 years with CFD and now with futures. As you guys can see, the trades that I've executed are all taken live with my students inside the Pro From Blueprint. If you guys want to join, go in the second link in the description and apply for the mentorship. But I've just showed this works, and by the way, I've been trading and taking trades and sending the trade alerts to my students for almost the past 2 years. And I think this year we finished the year with like 10 winning months, 1 losing month, and 1 break-even month or something like that. Just trading the flip zone setup, which works incredibly well. So go ahead and test this out, backtest it a little bit on the pairs that you trade, and let me know your results down in the comments section. Thank you guys for watching, and I'll see you in the next one.